in today's market, what do you think is the key traits that a trader needs in order to succeed?
Everybody can hit a buy button or a short button. It's what you do once you get into the trade. Follow the rules, discipline, and consistency are the name of the game.
Is there any sort of indicators or strategies that you recommend new traders to start with and learn about?
Absolutely.
So in retail trading, there's a saying that, if you place your stops too obviously, then the market makers will take you out and then flush you out and buy at a cheaper price.
Okay, ladies and gentlemen, if I teach you one thing in this interview is...
All right, we're here on Wall Street today, and guess where we're going? That's right, the New York Stock Exchange. And we're actually visiting our old friend, Peter Tuchman, the Einstein of Wall Street. All right, everyone, we're here with a man, a trader who needs no introduction.
Yeah!
The Einstein of Wall Street.
Einstein of Wall Street, let's go. What's up? Nice to see you again.
Nice to see you again after 1 year.
Yes.
Yeah. So would you say this year would be a good year for a lot of traders who are interested in the market to get started?
You know what? I think there's always is a good time to get started.
Always, okay.
Right? If I sit around and I try to analyze, am I too late to the party? Am I too early to the party? When is a good time to invest? There's never a bad time.
Yeah.
You need to get started right away, as soon as possible. You need to do your homework, right? Look, there's no such thing as a bad market. There's a bad entry into the market. And I'm a firm believer that using risk management technical analysis will give you the extra added value you need, the edge to get into a stock the right way. I can't predict whether the markets are going to go up or down.
Yeah, nobody can.
Nobody can. It's going to go up, it's going to go down. However, if we sit around and wait for the perfect waters, right, for the waters to be calm, we're going to be wasting a lot of time. So do your homework. The best defense against a rug pull is basically educating yourself about technical analysis, risk management, using stop orders, using the tools that the market gives you, and just jumping on in it. We don't, as a trader and or an investor, you never throw your eggs in one basket, so you diversify. And secondly, you don't buy everything all at once, right? So we have dollar cost averaging. You start buying small bits in the indexes, the S&P 500, or a particular stock. You start buying small. You can average into a long-term investment that way, and that's how you do it. So don't wait around. Don't waste time. Get in it. Whether it's 1 share, 10 shares, you can now fractionally invest in bigger companies, right? So don't wait. Start today.
So, introduce you to our Lambo, Mike.
Okay, cool.
We made a shirt for you. So we actually, knowing that we're here to visit you today, we collected a lot of questions from our viewers on social media.
Rapid fire, bring it on.
We're going to do a
Let's
rapid
go.
fire. Okay. How much money do you need to start trading?
So normally you need about $25,000 to become a day trader so that you get outside of the pattern day trading rules. But you can start with $1,000. You can trade options. So, and now there's actually a new thing, which I'm not sure what it's called, but they're a way of getting involved trading futures, where there are people who, it's called, I don't remember the name of it, company's called Alpha Inc. or something, where you can actually, they will finance you to start trading the market. So if you do your homework, you don't need a lot of money. You can start trading options with small bits of money, or you can start with $25,000 cash.
I see. And what about someone who has a full-time job right now that they can only trade part-time? What do you recommend them to do?
So look, there's an investing and there's trading. Everyone should be looking at their investing in their future on the long term. You can have a full-time job and still invest in stocks and companies and stories that you like. As a trader, if you have a full-time job, first of all, you can trade options, which means you're buying or shorting stocks down a week, down a month, down a quarter, and or you can swing trade. What is a swing trade? When a stock is really far away from its moving averages and you've had multiple days up or multiple days down, and you're using whatever indicators, whether it's Fibonacci or any of these wonderful instruments that the market offers you, you can be in a trade that's a 3-4 day trade. So it's a lot harder if you have a day job, but it's not impossible.
Sure. That's true, yeah, because I started trading part-time too, and then eventually transitioned to full-time.
Right.
But that took me like 2-3 years.
I would never ever recommend anyone to leave their day job to become a trader until you've done the homework. It takes 3 to 6 months minimum to become a real day trader, right? You've got to learn the game. It's, if I wanted to become a pilot, I wouldn't go to the airport, grab the keys, hop on the plane and start flying, hoping it's going to work out.
Yeah.
I would have, I'd have 3 months of reading the books. I'd have 3 months of trial of flying with a teacher, with a pilot, before I ever get in the plane.
Yeah.
Same thing with trading. What happened with this democratization of the trading community happened during COVID. Everybody with an iPhone and $100 can trade, but they didn't tell them that there are rules, discipline, consistency to become successful at this. The same things that make people unsuccessful, all those things, the opposite, make them successful, and we can go over that also.
Is there any sort of indicators or strategies that you recommend new traders to start with and learn about?
Absolutely. So at Wall Street Global Trading Academy, which is the academy that I started with my partner David Green, who was a market maker on the floor in the 80s, and he's been trading the market privately with his students for many years, and he started an academy together with me. We use, look, there are millions of different people with million different indicators. Some people, if you look at their charts, they look like air traffic control on 9/11, and I don't recommend that. But what do we use? We use the RSI, relative strength indicators. Okay, relative strength, meaning overbought and oversold conditions. We use the exponential moving averages, the 15, the 30, the 65, and the 200. These show support and resistance in stocks. And then we use what's called pivot points. Thinkorswim, which is one of the platforms that people use to trade, have a thing called pivot points. You don't need to know what it is. It's basically, it's a mathematical formula that also represents support and resistance. And if you put these things in your charts, and if you reach out to me, I'm happy to show you how to do it. We have people who will privately help you set up your charts. Those for us, why do we use these indicators? We use Fibonacci. We use yesterday's high, yesterday's low. There's lots of different things we use, but EMA, exponential moving average, RSI, and pivot points are the most important ones to us. Why do we use them? Because they work.
What's your opinion on AI trading or algo trading? Do you believe in it?
It's a hard question to answer. So algorithmic trading is meant, it's not AI trading. So algorithmic trading is one thing. So basically on the floor of the exchange, and I believe on a number of different trading platforms, you have what's called algorithmic trading. Basically, it's set it and forget it. You can put in certain parameters, whether it's volume, whether it's time, whether it's passive, aggressive, whatever it may be. There are private algorithms and there are public algorithms that traders can use. If I need to execute 100,000 shares over 2 hours, I put it in an algorithm which is TWAP, time weighted average price. If I want to buy it in relative to volume, I use a VWAP, that's volume weighted average price. So there are thousands of different algorithms that will help me determine my entry point into a stock from a day trading or an investment point of view that have certain parameters, time, volume, Fibonacci, highs, lows. For me, I love the human element in trading. So I wish we would get rid of all the technology and have human beings back again. But look, in this day, in this world where we live, you can't really go up against and fight the technology.
You can.
You've got to adopt it to a certain extent. So in my world, we use human trading and we use algorithmic trading. You can find a nice breed between the two.
Okay, so for retail traders, some of the biggest roadblocks is emotions, right? The mental game in trading. Do you see that on the floor of the New York Stock Exchange with the floor traders?
You know what? Not really. So I see it a lot. If you go back to the original Wall Street movie with Martin Sheen and Michael Douglas, right? The story about Ivan Boesky, he says, never get emotional about money, Gordon.
First lesson in business, don't get emotional about stock. Clouds will judge you.
Right, and trading using emotion is a biggest mistake. First of all, you can't get emotional about trading and or about money. And also the psychology of day trading is key. Everybody can hit a buy button or a short button. It's what you do once you get into the trade, how you exit the trade, getting the most out of your winners and losing the least out of your losers. That's super important. Trading should have no emotion involved in it whatsoever. Follow the rules, discipline, and consistency are the name of the game.
Do you think it's easier to manage risk and trade without emotions when you're trading other people's money? Maybe that's why retail failed, because we're trading our own money.
Exactly.
And that's
look, I don't trade my own money.
I know.
Up until recently, I've never been involved in the stock market for myself. So I trade other people's money. And as far as other people's money, the customers and myself, have a conversation. about how we want to get into the stock and how we want to get out of the stock, what certain parameters they want to use. Once again, I do not let emotions cross into my decision making when I'm dealing with a customer. I've built a couple of strategies which we use to trade for hedge funds, and if I let them, I'm very strict about that. You need to follow the rules. Look, letting emotions trickle in to your trading strategy can do you no good whatsoever. It is absolutely nothing but harm. So follow the rules. Discipline and consistency is the name of the game, and never get emotional in the trading world.
What's your opinion on smart money concept?
I have no idea what smart money concept
But
is.
he believes in Lamborghinis.
I believe in Lamborghinis.
Okay, how do you avoid stop loss hunting?
Stop loss hunting. Do you know what that is?
So
No,
in
okay,
retail trading, there's a saying that, if you place your stops too obviously, then the market makers will take you out and then flush you out and buy at a cheaper price.
Okay, ladies and gentlemen, if I teach you one thing in this interview is I've been dealing with market makers for 137 years. I went to high school with George Washington and Alexander Hamilton. I've known market makers for my whole trading career, and market makers don't give a about what the retail traders are doing. Not that you're any better than them or any less than them, but they are way too busy trading billions of dollars for their customer, for their account, to worry about a retail trader. When you're an unsuccessful trader, you must find someone to blame for losing money. And so who do they blame? They blame the market maker. I beg of you, the market makers don't give a hoot about what you're doing, about your stop orders, about anything. Stop orders should be placed 1% up or down around the last sale of the stock you're getting into. Don't look, market makers do not watch the stop orders, drag the stock down, take you out on your stop, and let the thing run up. It's absolutely insanity. So ladies and gentlemen, if you're making money, you don't look to blame somebody for your making your money, and you don't look for somebody to blame losing money. So do your homework, have a stop order on every order that you're in, and don't worry about what the market maker's doing. He doesn't give a about you. Excuse my language.
So for you, when you're trading, do you wait for one perfect setup, or do you kind of go out there and find your own setups on the go?
I know you. Anyway, we went to high school together.
Oh, wow.
Just so you know, what I do here on the floor is I trade for hedge funds and for prop shops. And so I trade here using different strategies, not technical analysis.
Okay.
But what I teach, and what David Green teaches in Wall Street Global Trading Academy, is that you do not cherry pick what stock you get in. Every stock that sets up, technically, we use price action and technical analysis to determine entry point on the long and the short side. We get into you cannot sit there and cherry pick which ones you want to get in. You get in every trade that sets up. Some you're going to make money, some you're going to lose money. But if you follow our rules at Wall Street Global Trading Academy, and you follow the rules of having a stop order on every trade you're in, you will never blow up your trading account. You will never lose a lot of money. You'll make money. It's a probability game. And if you're in every trade that sets up, and you follow the rules of stop orders and consistency, you'll make more money, and you get the most out of your winners and lose the least out of your losers. You will make more money than you lose. Net, you'll be a winner at the end of the day, the week, the month.
How do you make the process of trading enjoyable?
Trading is a matter of either making money or losing money. If I'm losing a lot of money, net, it's not particularly fun. I don't care how much money you have, but if I'm losing money, I'm not having fun. Look, my best suggestion to people is, whether you're trading, whether you're in marketing, digital, or whatnot, whatever you're doing, find something you love to do, and you'll never work a day in your life. Find something you love to do, and you'll have joy every single day. If you're in the market and you're making money as a function of having studied the market and learning, getting the memo, learning the playbook, and you're making your money and you're successful, you will find joy in it.
Do you ever get burnt out from trading? Ever?
You know
Because
what?
you've been on the floor for how many years now?
137
Yeah.
years.
So do you ever get burnt out
You know
over the
what?
last 137 years?
You know what? To be perfectly honest, to be honest, yes, probably. I'm actually, I'm a bit of a workaholic, and so I come here no matter rain or shine or joy or sadness or grief or whatever. You know what? Net, yes, I probably do. Do I get to points where the trading is not successful and I'm losing money and that burns me out? Probably. But at the end of the day, I'm able to find so much joy. Look, the stock exchange is filled with people who I've known for many years. These people are my friends. We've grown up together.
Yeah, like 10 people passed by just now who are your friends.
Correct.
Yeah.
And so, look, if I was sitting in a cubicle and I was just looking at a computer, I don't know if I'd ever find much joy doing that. But the floor of the stock exchange, what identifies this place so different than any other work environment,
Sure.
is these people, we know each other. We're in the pits. We're making money together or losing money. There's a lot of emotion involved in that situation. And so I just recently lost my wife after 35 years. And I came back, I took one day off and I came back to work the next day because these are the people I have grown up with. These are the people I've spent as much time as I did with my wife with. So I find, look, for me, the interaction between one human being and another is really where I find joy, whether it's sadness or happiness. It's a matter of that communication, right? So that's all I can say about that.
I'm sorry to hear about
It's
your
okay.
wife, too.
It's okay. Thank you.
Yeah.
That's why I come to work every day, so I can do this fun things with you guys.
Yeah.
Right? At the end of the day,
Yeah, we appreciate it.
It's okay. It's what I do. This is where I find fulfillment. And look, there's success. We gauge success usually by money.
Yeah.
Well, money's not that friggin' important.
Yeah.
Where do we find real happiness and joy? Is
The
in
relationships
is
you
in
built.
fulfillment,
Yeah.
right? If I can help somebody out there to find something they love to do or make some money or educate them, then that means I can go home tonight, put my head on the pillow and know that I accomplished something really good, worthwhile today.
Yeah.
I made you guys happy. It's good. I'm good.
Yeah, and I can tell that you're doing what you love here
Yeah,
as
of
well
course
every
I love
single
it.
day.
Absolutely.
Yeah.
Okay, next.
So in today's market, obviously the market is changing every single day, every single year. In today's market, what do you think is the key traits that a trader needs in order to succeed?
Humility. The humble trader is the only trader who's going to succeed in this market. If you're trading with a lot of ego and you're a know-it-all and you think that you know it more than anybody else out there and that you got this and that it's easy and you're never going to lose and all that, it's all BS. You will, I guarantee you may make a bunch of money at the beginning of the day or the week or the month, but at the end of the day, you're going to blow up your trading account. So you've got to take the ego out of trading.
Yeah.
You've got to take the emotion out of trading. You've got to inject humility into it, that you are always a student of the market. I'm a student of life. I'm a student of the market. You've taught me a lot of things. I need to learn every single day. Look at the situation, reevaluate it. The way we traded 10 years ago is different than we did 5 years ago, is different than we did a year ago. The way I approach the market, human beings, the algorithms, technology, what's going on in the world is different every single day. So when I come in, I take the ego out of the trading, I inject some humility, and I see what can I do today to make me a better trader than I was yesterday. The humble trader.
Everyone
Dig
can
it.
be humble traders.
There you go.
Yeah.
Ladies and gentlemen,
Yeah.
everybody around the world loves to ask me questions about how much money I make and what do you have to do to become a trader and all those things. What's so much more important is how did I get here? What is my journey? What is my story? And if you're really interested in that, and I've been around, as I said, for a long time, it's a really great story. Stay tuned. You get to learn a whole lot more about the Einstein of Wall Street, me and the humble trader chatting later tonight. Be there.
All right, if you guys are ready for some pro tips from obviously the Einstein Wall Street, remember to
Smash the
like
like button.
button and
Go for
subscribe.
it. And you get to learn more.